Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. I have a weekly Robinhood initiative slash challenge where I invest $5 every day. It's actually $25 on Mondays, and yeah, my goal is to be at 20% annual returns every year. Currently, I'm at around 8 or 9%. The S&P 500 is around 17, 18%. And yeah, we have a few more months left of the year for me to get up to the 20%. So anyway, we are looking at ticker symbol DBI. This is Designer Brands Inc. I have shadowed this company in the past, forecasted, modeled, charted out. And we'll look at those older charts. But let's see what went wrong with the stock. Are they heading in the right direction, et cetera, et cetera? Um, so yeah, let's go ahead and look at the bigger picture here. So the bigger picture is that this stock has been literally in a downtrend since 2014. Yeah, 2014, and it looks like we've got a I mean, this isn't even like a formation. We've just got a little hump, big hump, another little hump. So what we need to determine here is the strength heading upwards, the momentum, etc. So the RSI is kind of flat. It's at 46, and 50 is heading in the right direction. If we had to put this on a chart like this, we could do something like that. So we've got that. And then we can also do it again here, going this way. So it looks like there should be some strength resistance coming up over the next few months. Momentum looks on the monthly looks like it's ready to turn upwards. Looks like we put in a bottom candle right here. You guys can see that? Yep. The money flow index looks like it's overall going down, and it's kind of squiggling down right now. We'll look at the inside institutional ownership on that. The relative momentum index also looks like it's kind of curling right here. So momentum could be curling in the bull's favor. What I want to do now is I want to calculate and see if this $10 price target is good for this stock. But before I do that, let's look at the EPS here. We can see it went from huge negative to 2.12 to then 2.41, which is good. Sales is at 3.32 billion for 2023 so far. The shares outstanding is going down, which is good. It's showing that there is demand for the shares overall. All right, let's go ahead and calculate the stock price here. So they make $3,230,000,000. That's amazing. They have $147,000,000, 900,000 income. That's insane. And they have a market cap of only 649 million, so we're not going to include that in our calculation. Now we're going to go down and look at our cash. We're going to add our cash and remove our debt. So total cash as of recent is $50 million, which is the lowest it's been since, I guess, last year. So add 50,570,000. Total debt is 390 million minus 390 million, 300,000. All right. Total assets 2.1 billion, total liabilities 1.6 billion. So there's about a $700 million buffer there, which I'm okay with. It's a lot better than last quarter as well. Last quarter there was about I thought that was pretty rough. So 306 million. So about a $440 million buffer, which was similar to last quarter. Actually it went down from last quarter, it looks like. Looks like it's kind of hodgepodging in between in terms of buffers. So this quarter, the 429 quarter that they just reported, was that? So when are they having earnings? It's got to be soon. No, they just had it. Okay, so yeah, so in April when they reported, they had about a $440 million buffer. In January when they reported, they had a 441 million dollar buffer. So around a $400 million buffer there, which is okay. And we're gonna take this and we're gonna divide it by the 49,350,000. So the share price could be around $61 based off of my calculations. This is the aggressive side. So if we take the 3,038,170, 3,038,170, and we divide it by the more conservative number of 64,370,000. So the stock price could be between $47 and $60. And right now it's at 10. I'm gonna have to say institutions have to be buying here. They have to be. The old data showed that institutions own 95%. The latest SEC data shows it's 91, so they're actually selling. Insiders or institutions are selling. Vanguard decreased by almost a million shares. BlackRock, nothing. I mean, they still have position. William Blair decreased. Millennium Management recently started a 2.9 million share position. That's crazy. So looks like they're selling a little bit here. The key levels we're going to want to watch for. This is our long-term resistance. This is our long-term support, like right here. Whoops, I did the wrong. I did vertical. I needed to do horizontal. Right here. So, yeah. Let me cross that line. So this is kind of a, we go like right here. So that's going to be resistance 1, and this will be resistance 2. Okay, so if we look back at my drawing that I had in the last video, the price did come down to this line down here. It did get as low as 614. This looks like a double bottom, which was put in on the monthly chart, which is good. And as we can see, it is now staying above this line on the monthly, which if we scroll back, it is a long-term channel going down. So again, it looks like we could move to $14. Let's look at the yearly chart to see where the momentum is for this. Ooh, the yearly chart looks good. That candle looks good. Let's look at, I want to see the MACD. Ooh, look at the MACD. It's turning right here. That's good. I wonder if that's on the, can I look at the year? 1 year? No, that doesn't do it. Okay, I tried. Anyway, start. Yeah. So, the yearly momentum is heading in our favor. I would consider a position now, in my opinion. Um, yeah, this is one that I would put on my list to purchase. It's already up from $6. It actually got as low as, oh, this was March 2022. So, I mean, it did put the double bottom in again around $6 back in June. So almost the 100% move so far, but again, long term, we have quite a bit of resistance and we do want patience with this one. If you do have time to wait and you do have extra cash, this would be an okay one to get into as long as you are optimistic about the company. Looking at their last 5 years, EPS over the last 5 years is 14.6%. Or I'm sorry, that yeah, the EPS. And then sales is 3%, which is not good, but it is positive. So there is some resiliency there. Gross margins are at that growth level of 32%, which is crazy. Again, their debt is in a manageable position. Their quick ratio is very low. They do need to improve that. Institutions do own around 90%. It is a lower float stock in my opinion. So, I mean, this thing could really get moving. I do want to just see what kind of brands this company has. Our brands. So they have three brands. That's it. Designer Shoe Warehouse. Pretty boring. The Shoe Company and Shoe Warehouse. Nothing great. And then Commuto Group. Okay, so they have Jessica Simpson footwear and Lucky Brand. So, okay, so Designer Brands has a stake in Vince Camuto. I'm not very optimistic on either of those, but I mean the company is growing. They're let's see where income for quarterly. So they are down actually. The revenue is down, not substantially, but it is down enough. I do want to see what they're forecasting for uh what they're forecasting for the rest of the year. Wow, the stock went up 20% on the earnings call. That's crazy. Okay. Let's go down. I'm looking for 2023 guidance. We are lowering our sales and earnings guidance for 2023. Oh gosh, that's not good. Uh, so it was planned. Uh, okay, so they're decreasing their inventory, which is good. Um, as of the end of the quarter, we had two. Okay. So, okay. Um, okay. Oh man. Hmm. I'm a little like, okay, this could be a simple just hold for a couple year type thing, or trade it to the next resistance and then just buy again at the next support, maybe around $8. I don't know if the juice is worth the squeeze on this one. I mean, the shares float itself is pretty compelling. It is gonna be, it does mean the stock will get a little more volatile. Is it ready for the next big reversal? Maybe, maybe, but they're not gonna, I don't, I mean, I don't, I see them being flat compared to 2022 and then into 2024. They may be better, but again, it's all dependent on the discretionary consumer. I know we have, not we, but I know there's record high credit card debt at over $1 trillion right now. Um, Man, it is undervalued, but I mean, I could go either way on this one. I do think it's heavily undervalued, but I also don't know if it's going to get much better. And I do think it's going to ping pong between $6 and $10. So I'm gonna add it onto my Robinhood portfolio as a watch. Maybe swing it for a few days. I don't know if this is something I'd want to hold long term. Maybe if I'm swinging it and then I get held with the bag, I would feel okay holding it. But yeah, I'm just gonna go ahead and quickly add it to my Robinhood. But yeah, let's add that and RSSS. Okay, perfect. Yeah. So again, if you guys made it this far, please consider hitting the subscribe button, hit the like button as well. I hope you're doing well. Um, when it comes to DBI, if you have a long time horizon to invest, this one could be beneficial. It is a good buyout target at this price, in my opinion, as well. So take with that what you will. I'm not a financial advisor. I hope you're doing well.